Hey everybody, I'm Kenya with John Hurt Real Estate.
And I'm Sandra Sandifer with SMS Financial Services.
Woo! Okay, so I asked my girl Sandra to come in today and just talk a little bit about business structure, all that good stuff. So she's one of my preferred tax accountant people to talk to, you know, all that good stuff. I want to know, Sandra, I'm getting ready to start a business. What do I need to do first?
Well, I would say the first thing you need to do is figure out what kind of structure you want to have. You want to operate as a sole proprietorship versus a LLC, S corp, partnership, if you're going to go in partnership with some, if you're going to have a second person, or a C corp. Those are the typical structures that you need to have. And there are different reasons for each. But if it's just you want to start with an LLC because it gives you the best protection from liability-wise.
Okay. And why does that make a difference in the way I file my taxes, and does it make a difference with how I track my spending throughout the year to prepare for my taxes at the end of the year?
No, the tracking is no different. You have to be compliant, stay organized, and keep receipts, and try to come up with as many deductions as you can hopefully track. Because if you don't have the document, you're not writing that off, because if you get an audit, then you're going to have to pay that back plus penalties. So,
okay,
I would say being organized is the most overlooked thing that most business owners do.
Unfortunately, I am feeling attacked. Okay, I'm feeling slightly attacked.
I'm amazed at what I hear. But the simplest thing you could do is, like I said, figure out what structure you want to go with, and you go to your Secretary of State. There are a lot of businesses out there that will register your new entity for you, depending on how much you want to pay. But it is often very simple to just do it by yourself, by just going to the Secretary of State in whatever state that you will be operating. And there are people who will sell you on these complicated, go to Delaware, go to Nevada. If you are sitting in California and you're going to have clients in California, you need to register in California. Because what happens is you go and do that fancy Delaware registration, and then you realize that, I also need to register in California because that is where I am physically present and that is where my clients are.
Okay, that makes sense. So I want to go back to this tracking thing. So what are ways that we should be tracking? I know you said keep receipts. But what are things that we should be keeping receipts for?
Pretty much everything you do that you can tie to the business can be deductible. They're what IRS calls usual and customary expenses related to every industry. So that's the first basis. But if you can justify the reason why this expense happened, then it will be allowable. So you never know what might be allowable until you ask.
And is that something you would do? Like, would we come to you and say, hey, these are my receipts, what can I deduct? Or what does that look like?
First of all, you will not be bringing me any receipts. If you come to me with a box of receipts, I'm gonna send you back and tell you that that's a no-no. Because you had a whole year to organize. The old days of coming in to the accountant's office with a box of receipts is long gone.
Okay.
There's so much technology out there that you can use these days, and that is what I employ all my clients to use.
Okay, so what are your top two systems to use to help organize?
The simplest is QuickBooks.
Okay.
They even have it on the phone where you can basically snap a photo and attach it right into the software if you need to. You can put your receipts in Google Docs if you have to, Dropbox, all those things. So there's never a reason why you can say, hey, here's a box. Because one, receipts don't last as long as they used to. That's one. They fade. So if you have a faded receipt and the IRS can't see it, if there's in case of an audit, you're not getting a deduction. So for your own sanity, you have the expense. Let's say we're meeting right now for lunch. After the bill is paid, you snap the receipt, you put the reason what this is for, and you save it somewhere, and you're done. You can shred the physical one. But you keep the physical 2 months from now or at the end of the year when you come to my office, the receipt is faded. 2, you don't remember what you did because it's a year ago. So how are you going to really be able to take the deduction? So using software and current technology to stay organized is very important for you. And it'll keep you organized and it'll keep you out of trouble. And it's very simple.
Okay.
Another question?
Yeah, what are some common mistakes that you see from new business owners that could be easily rectified?
Oh, there's a plethora of those.
Top 3.
Okay, let's see. One, you register your business with the department, but you don't get an EIN number. So then you're not fully operating.
Okay.
Because you have an entity, but there's no tax ID number, so the IRS doesn't know that you exist. That's first.
Okay.
So then what are you going to do when it comes tax time? You're going to have to figure it out.
Yeah.
So get an EIN. Also get in a bank account that is separate for the business. A lot of people commingle their personal and business, so I would say that's the worst thing that I see. When you have a business and you legitimately register it with the Secretary of State, the whole point is to protect you. And it's to protect your personal assets. And it's to keep you and the business as separate as can be. When you go in, mix things up, people who might sue you or for any legal reason out there for them to come after your personal assets. And when you put this, you go ahead and use the business credit card for your personal for your business. The personal for the business is not so bad because you can always do an expense report and get reimbursed from your business to yourself. But putting the personal charges on your business is where it gets a little bit tricky. So you ever heard the what they always call like piercing the corporate veil?
Yeah.
Okay, so basically that's what that ties into. You're kind of breaking that safety net, that invisible safety net between you and the business when you start mingling those transactions. So if you get an audit, the IRS is gonna be like,
Sure.
let me see all your stuff.
Yeah.
Not just the business, I wanna see everything because clearly you going back and forth between it, so there's no separation of church and state, as they would say.
Yeah.
So that would be my top 3. Not getting an EIN, not having a separate business account, and then commingling with things.
Cool. Okay. I want to shift gears for a little bit, just a minute, and talk like housing and taxes.
Okay.
So I just bought a home this year. I work from home and I have my own business. What does that look like when I go to file taxes? What are some things that I should be looking out for when I talk to my tax person, and what are some questions that I should be asking?
Okay, so you have a business, you bought a home,
Yep.
and you are working from home,
Yes.
right?
Yeah.
Okay, so how the business affects your taxes will depend on what structure or entity structure you have. If you have an LLC and it's just you, naturally when you get that EIN number, the IRS is gonna ask you, do you wanna be a partnership? You're not gonna be a partnership. You automatically get defaulted to what they call as single member LLC, and which is treated like a sole proprietorship for tax purposes only. That doesn't mean that you're losing your liability protection because that's where the state comes in. So if you elect to, you're defaulted to a sole proprietor. You can elect to be taxed as an S corporation or a corporation. That is the other choice. And you usually have 3.5 months from when you get that, or even the start of the year, every year to change that status.
Okay.
So if you're, let's say the simple thing, they give you a single member, that means you're gonna file a Schedule C. So that just attaches with your 1040, and you can deduct your home office.
Okay.
Technically, you're supposed to have certain requirements to meet that deduction. But if you can allocate a certain amount of space, a closet, turn it into a desk work office, you can get creative with that stuff. An area of your house that you're not using that much, you can, because it's based on square footage. So you just set up your little office, and that is the area of your rent or mortgage, insurance, utilities, and everything that ties into that home that you can deduct on your tax return. And of course, if you just bought a house, then you definitely want to save your closing statement. you're gonna need that to prepare your taxes because you should hopefully qualify for itemized deductions. Hopefully everyone knows that when you file your taxes, you have standard deductions or itemized deductions. Usually if you're a regular worker, W-2, you don't know any assets, you take the standard deduction. But part of tax planning also, and the strategies are to figure out when you can buy a house and what exemptions do you get when you buy a house. Usually you get to deduct your interest, your taxes that you pay for real estate taxes, and part of your taxes that you pay to the IRS or the state for as part of the itemized deductions. You have charitable contributions. That's why they encourage people to donate to charity because you can deduct that as part of your itemized deductions. So all those things add up, and then you can go ahead and get a higher deduction than your standard deduction.
Okay. Since we're on that subject, what other tips or points would you give a first-time home buyer when it comes to their taxes, things to look out for, maybe things that they should be keeping at the forefront of their mind when they go to file their taxes? Obviously, closing statements.
Yeah, the closing statement is very important. When you own your home, outside of the interest and the taxes that you pay, that's really what you can deduct as a homeowner.
Okay.
Is separate from, let's say you had like a rental. You have more deductions that way. But you can't deduct normal repairs and maintenance on your home because they figured you live there. There's no business purpose to your home.
Right.
There are strategies out there where you can rent out a home and other things that you can do to maybe turn part of it to more of a business. But outside of like I said, interest and taxes, there's not much you can deduct when you actually live in the home.
Okay.
So that it's limited. Okay. So turning a part of it into a business, like I said, the home office deduction is a little way of kind of deducting some of those repairs and maintenance and utilities that you can deduct anyway and turn that into business.
Okay. Well, I don't know, that was good stuff, but a lot of stuff. So I feel like this is like such a broad topic that could need so much breaking down. So just go over briefly, like what services do you offer? Does your business offer? What's your expertise and how can people find you?
Okay, well, my firm, we specialize in, I'm a CPA by trade, so I usually I specialize in things that I can do with my license because there's a lot of things going on out there. So I focus on tax planning, tax representation, which is when people have issues with the IRS and only a CPA, an EA, or a lawyer can help you with that situation. So I do tax representation for people who have back taxes and don't know what to do about trying to settle it. So I work with those businesses and individuals who have those issues. And then the tax planning and tax advisory is anyone who wants to kind of use the tax code legally, save on their taxes at the end of the year. That involves more than coming to me at the end of the year with a box of receipts.
I'm feeling real attacked here.
And this is not personal. That is most people. And then I do CFO advisory services to help businesses scale. So those are my 3 areas of focus.
Okay.
I can be found on Instagram, Facebook, what else? Twitter, and LinkedIn.
Okay.
And I have a website if you just Google SMS Financial Services LLC.
And she's on my Trustin page, so you can just go under accounting and you'll find her there.
Now, one thing I would like to advise everyone, like I said, most business owners are very busy building their businesses. And you guys have wonderful ideas and are great at what you do for your business. How would you say, the weakness is always in the financial part. You guys leave your financial stuff for the end of the year. And then you scramble and try to figure out how to get it done. Understand that we call that compliance work. That is the stuff that is necessary and you have to do to keep the IRS off your back. But you're leaving the whole year to sit down with your accountant or tax person to discuss what you want for your business financially. Whether you want to scale, how can you save on taxes? You can't save when the year's already over. You can't come and say, hey, I need you to save me like 20 G's this year. I don't want to pay any taxes. And I get that a lot. And I'm like, how do you do that without a plan? I'm like, do you go on trips without plans? Okay, but
no.
It costs you, doesn't it?
It does.
Right, exactly. So you go to that airport and be like, I'm going to Hawaii today.
Yeah.
And they're gonna hit you with that
Previous.
airfare, and you're gonna rethink your decision. It's the same thing. You have to actually sit down and